You make a good salary, you need a loan. You hit apply, and within a fraction of a second, you're rejected. Just an immediate wall. Most borrowers treat the application process like throwing darts at a board, hoping that if they keep throwing, one will eventually hit the target. Modern banking relies on rigid, automated algorithms to review initial applications, not humans. This funnel represents incoming loan data. 90% of applications are ejected by the system before a human ever sees them. These machines are engineered to find reasons to say no. Only the remaining 10% survive to reach a secure vault for review. This algorithmic wall consists of 3 specific automated tripwires that every borrower must navigate. Securing a loan is a rigid compliance test, requiring you to outsmart the machine through strategic preparation rather than volume. The first automated hurdle in the banking algorithm is your credit baseline. Premium lenders operate on a strict mathematical rule. They auto-reject profiles with a CIBIL score below 750. This gauge tracks a typical credit score. A single late payment instantly drags that number from a safe 780 down to 740, crossing into the red zone. The millisecond your score drops below 750, the algorithm terminates the application, completely ignoring your income. Borrowers often assume a strong cash flow guarantees approval, but to the machine, past credit behavior always overrides current income. Failing this baseline forces you out of the premium market and towards subprime lenders charging punishingly high interest rates. If your credit baseline isn't secured first, every subsequent step in your application is irrelevant. If your score is solid, you hit the second and most punishing filter, the inquiry trap. When borrowers get rejected, they often panic apply to 4 or 5 different banks at once, thinking they are increasing their odds. Every one of those submissions triggers a technical consequence called a hard inquiry. A hard inquiry is a permanent mark etched onto your credit file every single time a new lender requests access. The algorithm interprets these simultaneous pings as sheer financial desperation. This creates a cascading collapse. Bank B sees Bank A's inquiry, flags the perceived risk, and triggers an auto-rejection. Your score actively drops with every new flag. Submitting multiple forms feels like productive momentum, but in reality, you are systematically destroying your own credit profile. Because all banks pull from the same centralized bureau data, these automated rejections happen in real time across the entire industry. Lenders are a highly connected network. They share your data and your mistakes instantly. In banking, application volume is the enemy of approval. Every extra submission actively lowers your probability of success. For those who survive the first 2 gates, there is one final tripwire, the administrative wall. Many high-income borrowers assume their wealth grants them a pass on messy paperwork. Banks use optical character recognition, or OCR software, to scan and verify KYC documents. No human eyes look at your ID during this initial phase. That algorithm hunts for tiny inconsistencies, a minor name-spelling mismatch between documents, an outdated address, or a single incomplete field. One mismatch causes the system to halt the application and toss it into a bureaucratic dead zone. Skipping 20 minutes of careful administrative proofreading will cost you weeks of manual review delays or an outright denial. To a machine, wealth means nothing if the data doesn't match. Administrative hygiene is just as critical as your financial health. When you look at all 3 gates, the truth is clear. Approvals belong exclusively to the methodical, never the desperate. This split screen shows 2 paths. On the left, the gambler spams applications across the internet, hitting a wall of automated rejections. On the right, the strategist treats a loan as a calculated, single-shot execution, clearing preparatory steps first to ensure a successful application path. Blindly guessing your approval odds sabotages your future financial leverage. The only way to bypass the algorithmic wall is to run a preliminary diagnostic check before you ever submit a real application. Never trigger a hard inquiry until you are mathematically certain your profile clears all 3 automated gates. LP FinAdvisor acts as your diagnostic shield, running this free, zero-risk eligibility check for you. DM LOAN or call 810-349-3174. Let LP FinAdvisor help you choose the right loan, bypass the traps, and ensure your capital is secured.